depreciation calculation using the IRS modified accelerated cost recovery system. You have 5 steps that you need to follow to correctly do that. Now, step number 3 has this property class and recovery period. In this video, I'll explain how to correctly find the property class and the recovery period for that particular property to correctly find the depreciation deduction. Not that every property depreciated at the same rate. If you buy an automobile, it will probably depreciate in 5 years, but if you do a sewerage system on land improvement, things like that will go for 20, 50, 15 years, something like that. So now to do that, we're going to use this document that you can download from the IRS site, or I have also posted a link to the openeducator.com where you can find this document. So we'll jump into table B, where we have the appendix B, the property class lives and its recovery period. It has 2 tables, table B1, appendix B1 and B2. I'll be using these 2 examples that IRS gives in these documents, example 1 and example 2 together first, and then we'll talk about example 3. So example 1 and 2, so in example 1, someone is producing manufacturing paper. In example 2, the person is manufacturing rubber, and both individuals have done some significant improvement on the land. So what you have to do to correctly find out the property class and its recovery period, first you have to look at table B1. So table B1, you will see that 00.3 has land improvement listed in there, and it has a GDS recovery life 15 years. That's GDS if you use GDS system, so recovery would be 15 years. If you use ADS system, the recovery would be 20 years if it's a general land improvement. However, you cannot just stop looking at just table B1. You'll have to look at table B2 as well. B2 is a longer table where you have some activity listed in there. So what I would like to do is I would do a Control F search and find land improvement and see. So as you can see, land improvement can be listed. Let me show you. So here, oops, land improvement, suddenly jumping to something. So let's start from table B1 and search the, I think I should have a space there. That's why it's not searching correctly. So I'm going to search this land improvement. As you can see, table 1 has land improvement. That's a general land improvement. It has 15 years GDS life and 20 years ADS life. If you go to table B2, which gives you the activity types, if the land improvement is done under agriculture, then it has a different GDS life and ADS life. If it's used for chemicals product and manufacturing chemical, it has a different life. As you can see, 5 years and 9.5 years. If it's a paper manufacturing, so first example uses paper manufacturing. As you can see, land improvement is listed here under paper manufacturing activities. Therefore, you're not going to be using that B1 table. You'll be using this B2 table where the GDS life is 7 years and ADS life is 13 years. So if you use GDS system depreciation, the life will be 7 years recovery period, and then if you use ADS system deduction, then you will be using 13 years. Now I will search rubber manufacturing and see land improvement is listed under there. So let me go there. Rubber. Here is the rubber 30.1. You will see that there is nothing listed under land improvement under the rubber manufacturing. So you cannot depreciate that activity under this activity category 30.1. So if you are doing rubber manufacturing and did some improvement on land, then it is the land improvement is not listed under the activity, you have to go back to that original general category table, which is the table B1, and use that land improvement GDS recovery time 15 years and ADS recovery time 20 years. So to kind of summarize, you have to look at both tables. If the activity is listed under the activity category, then use that depreciation recovery period. If it's not, then use this general B1 table to find the correct recovery period. In example 3, it uses a retail store. Someone is running a retail store, and then they bought a desk and a cash register for their business, and how they are going to be depreciated. So that's the question here. So in example 2, as you can see, under office furniture, desk is listed. However, cash register is not listed here. I'm going to search retail here, see if we can find anything related to retail store. As you can see here, 57 activity category is the retail, wholesale and retail trade, and cash register is used under that category. So then the GDS life will be 5 years for the cash register. However, there is no desk here in this activity category. So desk will again be used as a general depreciation, table B1. So you'll be using the table B1 to basically for that. So desk will be depreciated in 7 years as the office furniture. If you use the GDS system, if you use ADS system, it's going to be 10 years. However, cash register is not here, but you can depreciate that under that retail business category, which would be 5 years if you use the GDS, 9 years if you use the ADS. I hope this explains how to correctly find the property class and its recovery period. If you have more question, you can always check these documents by IRS to basically correctly figure out